So, on today's episode, I've got Brian Dillard, who has raised over $65 million worth of capital for syndicators like Brandon Turner, Ashcroft, as well as Focus Capital. He's going to give us some inside tips, behind the curtain peeks, and tactics into what you should be doing if you are trying to raise capital in today's market. Welcome back to another episode where we are talking investor relations today, raising capital, and I've got a perfect guest for this conversation, Brian Dillard. Brian, thanks for being on, man.
What's up, Ian? Hey, man, thanks for having me. Yeah, it's
Yeah,
good to be here.
dude, we met when we were both doing some work at Open Door Capital, and
Yeah.
then you've gone on to help raise capital for a few different investors. But take me back, man. You've been doing this for how many years now?
So it's only been 3 years, which is
Got
kind of
it.
wild because it's been one of those 3 years that's just jam-packed, right? So
Yeah.
started out at Open Door Capital. I was from a fundraising background before that and nonprofit fundraising. And Open Door Capital was just wild. Like I was there 2022. So you're at a time in the market cycle where just everybody's throwing money at real estate. And we had Brandon Turner at the helm, right? So he'd been on the Bigger Pockets for 10 years and had a huge following. And so, um, man, I think I probably raised about $65 million just during my year and a half there. And we went from roughly about half a billion to a billion in terms of assets under management during that time. After that, jumped over to Ashcroft Capital. So a big firm, about $3 billion, multifamily assets under management. Joe Fairless is the main guy over there. They have a really strong investor base, about 3,500 people, and this really good time there. A lot of that was actually okay. We bought a lot right over the past 10 years, and some of those assets were bought at the kind of the peak of the market, hindsight, and so it was kind of helping investors who were in those deals figure out what the heck is going on. Right? Things aren't like the math changed because the Fed raises rates 11 times and nobody saw that coming. And so just kind of helping people maintain confidence in, okay, my money's in this deal. You guys have a plan. And so that was my time there. And then most recently, I've been working with a smaller firm called Focused Capital. Chad Sheeler runs that and mainly Midwest focused multifamily group. And that's been really fun too. So I've kind of had this pretty broad spectrum of firm sizes, working with different types of investors. And it's been super fun.
Yeah. I mean, dude, even for a short stint that, 3, 4 years, not a long time, but you've seen a full market cycle. It almost feels like,
Yeah, it's kind of amazing. Honestly, I look back and I'm just grateful to have that, right? Most people, you have to be in this for, decades to kind of see those swings
Mhm.
and to kind of get to come into it at a time. Selfishly, I'm like, well, kind of saw the red hot money raising and then, oh man, this is really tough. And even now, I think we're more in a season, this is 2025, like mid 2025, in a season where the fundamentals are there, but there's still a lot of kind of, clouds in the way of, okay, what's actually going on? And so kind of helping investors work through that has been pretty neat recently.
Yeah. Yeah. That brings up a great point because I always think about certainty is kind of the
Mhm.
word I latch onto, right? And there's so much uncertainty right now in the market. And there always kind of is, right? When we're evaluating risk, we look at it like we're moving people through kind of three phases. There's information, there's risk analysis, and then
Mhm.
there's decision making.
Mhm.
And where some IR guys get stuck is they just stay in that loop of like information and risk analysis, and they never actually move over to, hey, we're going to make a decision. It may
Yeah.
be no, but we're at least going to come to a conclusion that it's no and why. But the
Mhm.
risk is also never going to be zero.
Totally.
And so we're
Yeah.
not just going to stay in this loop forever of information and risk analysis.
Yep.
And so how do you approach that when you're talking to people of like, you're trying to help them with the uncertainty, knowing that it's never going to be, a zero risk game.
Mhm.
And then what does it also look like when the future it's always uncertain. Sometimes
Mhm.
we're just willing to admit it and sometimes we're
Yep.
not, right?
Yeah.
How do you navigate that conversation when it comes to certainty with an investor?
Yeah. I mean, super, super good question. Yeah, I think what I personally do is I've dug into, um, frankly, I've subscribed to a lot of kind of industry data, economic data, news that
Mm.
is relevant, right? So I'm honestly, man, you know what I've recently used is this app called Perplexity. It's an AI app. It just gives you like really good quick synthesis of what's going on. And so what that's allowed me to do, I think, is kind of have this diet where I'm taking in clarity, right? I'm taking in what is clear, the fundamentals, right? You're looking at supply and demand. Like, I don't know what's going to happen with the Fed. I don't know what they're going to do with interest rates and, how that's going to affect values and all that. But what I do know is, okay, what do I know? And so kind of being able to come in even before we're talking about, answering your question directly, like being able to come in from a place of confidence, right? Of, okay, here's what we do stand on. When it comes to the conversation with an investor, I think part of it is we precede all of that digging into risks in a deal. Like prior to that, we're looking into, okay, why are we even talking? Like, what are
Mm.
you actually trying to achieve?
Yeah.
And, kind of I think you have to start there if you really want to be somebody who's a partner who's providing real solutions to real problems, right? Somebody wants to retire by the time they're 60. Okay, well, how are we going to do that, right? And then to your point, more directly, we have these different cycles. And dude, I'll tell you, like looking back from 2022, 2023 through 25 now, like we can see where the cycles were, but in each of those time periods, there was every week, probably every day, an investor who's like, oh, I don't know about this. I don't know about this. Right. And now we've seen some of the things materialize where it's like, if they would have gotten in, we would have done well. Right. And so I think to your point, it's really being able to help them see, all right, what are the risks? And then from that place, being like, here's what we're doing to mitigate those risks. That's probably one of my favorite things. I think I'll say it again just to be cheesy, right? It's like, hey, here's what the risks are. Here's what we've done to mitigate those risks. And then, here's what we anticipate will be the outcome. And here's what we anticipate how that will impact you and your investment. Without diving into all the particulars of, particular example, I think that's really where I go to with an investor. It's, again, kind of personally, I'm equipped with what's happening. And then I'm looking at what are your goals. And then based on those goals, I'm saying, okay, here's how this particular deal or here's how what we're doing can really help you get there. And the risks, like, let's start with them, right? Let's start with what you might be fearful of. And then let's move into, okay, here's what we've done to solve that and, move into that decision phase.
Yeah. So as an operator, what are some of the things that they can do to help equip you in that conversation, right? Like we talked a little bit off camera of the idea that some investors are betting on the jockey versus the horse. As an operator, what are the things that they should be building up that make that conversation easier for you when you are talking to a prospective investor, to give them the confidence, to give them the certainty that is, I liked your example of the third party data, right? Like bringing that in, but what is it that the firm itself should be doing to help build that up even more?
Yeah. I mean, every investor's thinking like, what's their track record? Who is this that I'm talking to? And one of the things I hear probably on 90% of my investor conversations, it's like, particularly if people find us through social media or something like that, it's like, oh, I filled out this form to talk to you guys, and then 100 others came, right? It's like, there's so much competition. And so, and what that means
that Facebook algorithm is working.
Oh, dude, it's locked on, bro. It's locked on. So what you need to do is really establish yourself as different and being able to, and here's the deal. Most investors are probably going to find a handful of operators, right, that are gonna be a good fit for them, right, in different asset classes. And I don't think we should be threatened by that. I think it's something that we want to celebrate, because if we can give them a good experience over a long period of time, we're going to win out. But back to the point, when I think of what's needed as an operator for an investor relations team and really being able to raise capital, it just comes down to who are you and what have you done, and kind of having a thread of consistency with regard to your values as a person. Do you have integrity in what you've done? Have you displayed that, and how? I've worked with, like I said earlier, very different sizes of firms. And so, what I've seen this done very well for different levels. So for a firm that's just a couple of years old who doesn't have that track record, there's ways that I've seen that displayed for investors so that they're confident, right? Some of that, like I'll give you this example with Focused Capital. Like Chad's been doing this for a handful of years as a, kind of as an entity, but he's been investing personally for a long time. And so what I've seen him do is, all right, well, just putting that in the narrative, being very forthright with an investor. So, hey, like we've only been around as a business for a couple of years, but I invested my own capital first before I took on investors, right? And so that's
huge. When you can say, I put my money where my mouth is, I feel like that really changes the conversation for a prospective investor, where they're going, Oh, okay. Now I actually believe in this, where there's a lot of syndicators out there right now who are raising capital and they're raising 100% of it. They're not putting any money in the deal.
Mm-hmm.
And or they're offsetting their acquisition fees with their money in the deal.
Mm-hmm.
And I think when an investor can actually demonstrate or show, hey, this is how much I believe in. I'm putting my own capital into this, and here's how much. I think
Yep.
that's, to me, some of the questions investors should be asking
Yep.
is, hey, show me how much you like this deal by
Yep.
how much you put into it, rather than when you're playing with house money. Sure, I'll buy every deal I can find on the street.
Sure. Yeah. Yeah. No risk for me, right? So I think I've seen different operators approach this from, like, so for example, Brandon, right? Brandon Turner at Open Door Capital. Most of our investors kind of had some familiarity with him and his
Totally.
10 years, right? So often the conversation with them in terms of kind of this trust is, hey, like, we are so public in what we do that if we screw up, it's going to get all over the internet and the business is going to be, really hurt, right?
Yeah.
Ashcroft, same type of thing. And then with Chad at Focused Capital, it's very different, right? We actually can't afford to screw up because we have so few deals. So I think it really doesn't matter in some sense what size you are. It's really about kind of evaluating, all right, what are our strengths and weaknesses? What is an investor's mindset going to be when they come into evaluating the risk of us as an operator? And then what can we do just to address that head on, right? And, it really, I've just seen any kind of, cards that somebody holds, you can win, kind of to use a poker analogy, like you can win at the hand. You just need to know how to present that in such a way where it's honest, but also, kind of helping somebody really locate you in, in that the risk, range.
Yeah. Yeah. You bring up a great point. This was something that kind of opened my eyes when we were working together on some stuff at ODC, was the amount of like reputational equity
Mm.
that an operator has and how that kind of plays in. And there's an old school like sales framework that goes through person, product, place, then price. And the idea is you have to satisfy a level of certainty around the person, the salesperson, the product, what it is they're buying, and the place, which is equivalent to like the brand, right? The reputation. And you have to satisfy those before you earn the right to talk about price. And I see the same thing play out a lot when it comes to capital raising. Slightly varied, right? So the way I look at it is, do you know the operator? Right? Is there a reputational aspect that you know, like, and trust them, where you could potentially be having a conversation around betting on the jockey versus the horse? Have you ever invested in a syndication before?
Totally.
So the actual way that you are purchasing, the vehicle of investing, have you ever done that before? Because if not, I probably have a lot I got to educate you on there and set expectations around.
Yeah.
And then the actual product itself, like this specific deal, this specific fund, how familiar are you with that? We got to kind of talk about all three of those things before we ever have the conversation of how much are you going to put into the deal.
Absolutely.
And I think within that, there's a huge component of, man, how known is the operator? What would you say in your experience, how much does that come into play in the conversation based on either the personal brand or maybe, because I kind of think of the reputation as twofold. There's reputation for the company, but there can just be reputation for the person, right? How do you see that kind of come into play when you're having those conversations?
It's huge, man. I mean, it's everything. Like I think the biggest mistake a limited partner can make is just looking at deal numbers and, oh, this one has a higher return, I'm going that way. And there's so many stories of that just backfiring on people, right? And so what I see most commonly is the people, like, I'll give you an example. The other day, I was talking with a potential investor, and he actually didn't come in through any of our proper like advertising channels. He just kind of showed up on my calendar. And I was like, who's this guy? Right. And so it turned out, I was like, hello. So it turns out he'd been following, again, Focus Capital, Chad Sheeler, for a while, just on LinkedIn. Right. So like saw him LinkedIn, saw him posting some things, and through that, and that didn't cost Chad much money other than time, right? Just generating some thoughts. This guy jumped on my calendar. And so we talked for the first time on a Friday. By Monday, he was ready to invest, and he'd sent his money in by Wednesday. And so it's like, he didn't follow the, he comes in as a lead and we warm him up with all this marketing, blah, 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 blah. It's like, there was that trust. And I saw that again, back at Open Door Capital with this Bigger Pockets brand that Brandon was affiliated with. And there's this kind of huge tank of trust that people come in. And so for me in my role, what I'm essentially doing, particularly with these people, is just wanting to extend that experience, right? So as a person who's, kind of meeting them in that place of, all right, you already trust us, you already know us. I can come in and kind of help be a guide for them. So some of the ways I do that are, okay, what are your actual goals, and kind of have a discovery process around that first and foremost. What are they actually trying to achieve through this? Once we establish that, and sometimes I'll just straight up ask, like, okay, so what's your portfolio look like? What percentage allocation do you have in different places, and how does this fit in? And trying to help.
Essentially, you're trying to ask them, like, how have you? Again, I try to dumb it down to, like, it's information, risk analysis, decision making. It's like, how have you analyzed risk in the past?
Yes.
In order to make a decision, yes or no, so that I can help just assist you in walking through the same way. And instead of me saying, here's how you should be looking at it, I can say, hey, you tell me how you look at it, and I'm happy to provide you the information and walk you through this to get you to that decision.
Yeah, absolutely. So, I think once you have that, so that's extending the trust. It's taking it from out here, right, to you and me as the investor. We're hearing from you what that looks like, and then I basically am taking that and tailoring this conversation about a particular deal to you as solving that goal you have.
Yeah.
Right. So
give us some tactics. Like, if you were talking to either an operator that's raising capital or maybe like an IR manager, what are some tactical ways that you can build trust? I mean, like, one of the things that comes to mind is trying to do Zoom as much as possible, right? Putting a face to the name. I know one of the things that we worked on a lot was like sending out selfie follow-up videos, things like that, to increase show-up rates. Because now it makes it to where you're not no-showing a Zoom link, you're no-showing a person who just sent you a video. And my philosophy is that human curiosity doesn't allow somebody to not watch a video you just sent them.
Yeah,
if I send you a selfie video and I say, hey, Brian, what's up? Hey, I had a couple of quick questions for you. Like, you see that text come through, you're clicking on it to see what the heck it is I said.
Absolutely, man. Totally. So, I mean, I think especially in this kind of AI age where everything's so automated and fake, right? We want to distinguish ourselves as much as we can and be human, right? And be able to, like, relate to the people. And just think about it, like, old school business was just done handshake across the table. So we do have these luxuries of being able to do things like social advertising and really have a bigger reach. But I think as much as we can, we gotta have some of these tactics be very personal. So if somebody's local, like, maybe you're hosting local meetups, or you have kind of groups of investors, bring a friend, right? So you're kind of building your base while establishing that deeper relationship. I mean, I've even seen it with, the selfie videos. Preferencing Zoom over a phone call is really key, I think. So again, kind of the more human connection you can make, the better.
Yeah.
This even, I think, extends to how I do a phone call, right? I think when you're immersed in this world of finance and real estate, it's very easy to just kind of spew off all these numbers and spew off all these kind of acronyms. You don't really know unless you kind of ask somebody and give them the opportunity to represent, like, if they even have familiarity with that, right? So you want to just, again, you want it to be very approachable, right? In that first conversation around just getting to know them. Honestly, like, pretty casual, I think. Casually professional.
It comes back to certainty, right? If you talk over somebody's head in acronyms, it decreases their certainty. It decreases their confidence. They feel dumb. They're not going to ask the question, which means they're never going to give you the objection that they actually have, and you're not going to move forward. So you're going to sound really smart, but you're actually not going to move closer towards a sale, right? Of getting an investment.
It's like a Warren Buffett quote, right? It's like, he talked about, I would never invest in something that my sister doesn't understand.
Totally.
And so you're like, all right, I need to make this clear. But here's the reality. You're probably going to jump on calls with people who are maybe operators themselves, or a broker, right? And then the next call might be with, a retiree who's just, like, never invested in anything like this before. So there needs to be some nimbleness, if that's a word.
Well, that's where I think that question of asking, have you ever invested in a syndication before,
Hmm.
is super helpful to know early on. Whether
Yeah.
you're doing it in a lead form or you're doing it
Yes.
early on in a call, it
Yes.
gives you such a grasp on, okay, where are they coming from?
That's
Okay,
right.
they've done some of this before. I can probably use some of the same language
Yep.
versus, okay, if you've never done this before, let's walk through some of the expectations of how this is going to go.
Yeah, absolutely. I mean, that one question is so effective. And
Mhm.
for me, as the guy who's calling them, it's really helpful for me to kind of get a sense of, okay, here's kind of where I think I'll probably lead this conversation. This first, heck, even if it's a 5-minute conversation, right? I'm always referencing that form. And it's like, oh, I saw you might want to invest, 200 grand this year in real estate. Yeah. So just referencing that is really key.
Yeah.
Yeah.
That's great, man. You mentioned a couple of things. One, this idea of utilizing LinkedIn. And I think you gave a great example because I think Chad's done it really well where you see the transparency,
Mhm.
keeping people informed, right? People are curious. They're on the sidelines. They want to know what's going on behind the curtain,
Yep.
right? Don't just give me the front of all this really pretty marketing. Like,
Mhm.
show me the nitty gritty. Show me what's going on in the office. Show me what's going on at this
Yep.
development site. Like, keep me informed. Give me the progress updates,
Yep.
but then also provide some education. So for
Mhm.
the guy who maybe is a little bit more hesitant, where, I mean, I'll tell you transparently, I invested in a syndication years ago
Mhm.
and I never did any call. I
Wow.
just went straight to the portal,
Trust the money.
register my investment, accreditation letter, wire transfer.
Wow.
But I'll tell you, the reason was I was intimidated to talk to an investor
Yeah.
relations guy. I didn't
Yeah.
want to talk to a
Find that.
guy where it's like I was going to be out of my league and I
Mhm.
wouldn't be able to carry the conversation. And I didn't
Yeah.
want to feel the pressure of getting sold. And so it was
Yeah.
like, okay, give me the information. Let me look through it. Let me
Mhm.
send it to some of my people who are going
Right.
to vet it, right? Okay. And like, yeah, I'm going to move forward on it. And I never talked to anybody, but it was because of my own fear of going, I don't want to talk to somebody that's smarter than me, that maybe is going to sell me or pressure me. And I don't understand it enough to be able to hold my own ground.
Yeah.
I think that there's a lot of people on the sidelines like that, where if
Mhm.
you put out some of that information educationally, speak to the new investor and
Yep.
put out content directed at them, but then
Yep.
also speak to maybe your more educated investor and
Totally.
put out some content directed at them so that it shows you actually know what you're talking about. I
Yep.
use the phrase, you want to speak to somebody's hair. You don't want to talk over their head completely to where
Mhm.
you make them feel dumb and they're
Yeah.
not going to actually be honest with
Right.
you. And you don't want to speak like eye to eye where you're trying to like get in an argument or like
For
match
sure.
wits with them. So you
Yeah.
want to speak to their hair to where it's like it's not going over your head,
I love
but
that.
it's high enough that you're building authority with the investor. So
Totally.
they recognize you as an authority in the space. They know that you know your stuff, but they're not feeling like it's an argument or a matching wits kind of thing. So it gives them confidence in you without decreasing the certainty.
So good. Yeah, that's so good, man. Whenever I'll give you kind of some of my inside tips. So, like
Yeah, dude.
whenever I hop on a call with somebody, I used to think rapport building meant, hey, I need to like find as many things I have in common with this person as possible and share that, right? So thankfully I moved around a lot as a kid. So basically anybody I talked to, I've probably lived there. So I was like, oh, this is the thing, right? This is the thing. But actually what I came to find was what landed better was kind of what you're talking about with kind of speaking to their hair, where I'm like, hey, I just worked with an investor who has the same exact goal, right? Or we have, most of our investors have would say a similar thing. You can do the negative too, right? Where you say, hey, uh, we're not a fit for everybody. People who are looking for XYZ, short-term return, whatever, blah, 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 are not a fit. But, for anybody kind of looking for this, right? So you're establishing yourself as, I've been here before. Like I've worked with people just like you and help them achieve the results you're trying to get to. Let's get to it, right? Let's
Yeah.
talk about that.
Yeah. A little bit of like herd mentality almost.
Totally. And okay, pro tip. So Robert Cialdini, his book, is it called Persuasion? I think it's called Persuasion, or it's called Influence. I always mix it up. Look it up. It's like his
Oh, yeah,
main
yeah. I
book.
know what you're talking about.
It's kind of like these, psychological things, right? Like, I think he does a really nice job of basically painting like the reason why people make decisions, or really it's kind of how sales is done, right?
Yeah.
And I think having some of those, dude, just AI it, right? You could read it. I think it's a good book. But like, okay,
A
what's the
little
main?
textbooky.
Yeah, exactly. So just kind of like thinking through some of those things like scarcity, right? Or, the herd mentality, like what are other people doing? Those factors, I think you want to be careful not to manipulate people,
Right.
but it's important to
Yeah.
instill your, those kind of principles
Well,
in your.
okay, so let's dive into that for a sec, because I think you brought up an interesting point. You can talk about scarcity and urgency. So scarcity is the limited number of spots, like a limited
Yep.
availability.
Yep.
Urgency is going to be timing. So
Yep.
you can, and most guys are doing this anyway because they know when they need to close their
The
raise.
clock.
So
The
they're
clock.
already forecasting. So you
Right.
know how much more money you have to raise, and you know what your average investment dollar amount is.
Mm-hmm.
So you know how many more spots are
Right.
left. So you
Right.
can introduce a level of scarcity based on the amount of spots that are left.
That's
That
right.
is completely factual.
Yep.
And then you can also introduce a level of urgency based
Yep.
on that same forecasting,
Totally.
right? And knowing when your closing dates are or when you're closing the round. And
Yeah.
so I think those are important to bring up,
Mhm.
but I think you also don't want to prematurely
Nope.
fire those bullets, and then you're like, oh, do we just keep
Totally.
saying the same thing every other day?
Yep. Yep. Totally, man. No, I've been on both sides of that where it's worked really well, and then we've had to figure out, oh man. So I mean, that is a key thing in capital raising strategy of just at every kind of stage of the raise, you want to really understand what are those things, what are those realities, right? That we can put out there. A lot of groups, like Open Door Capital, one of the things we would do is when we were basically at that point where we'd hit, say, 50% subscribed or 75, like we would ship that off, right? And so we're just, and there's a whole nother podcast that you probably want to do just kind of about the process. And I mean, I know you're an expert at that, so
Sure.
maybe not, but there's a lot of CRM data and all this stuff that you want to make sure
you're also giving other investors, you're creating some FOMO.
Yes.
And you're also giving them confidence that, like, oh, other people are doing this.
Yes.
Other people are jumping. There's momentum to this thing.
That's right.
And that contributes to some of the FOMO, but also gets them to go, maybe I should jump on board too.
Right.
Maybe I should check this out. Oh, I can't wait any longer. I'm going to miss out on this thing. And so I think there is some psychology to making sure you do give some updates along the way so that investors on the outside can see the momentum.
Yes.
And you potentially get some people across the finish line, towards the end.
Yeah, totally. I mean, and that's where, generally speaking, especially if you have an existing investor base, you want to give them early access, right? And kind of give them this special treatment, and then, do the scarcity with them. Hey, we're going to release it to the public in, 10 days. So, book your meetings now and let's get in. This one's smaller than the last one. Like, it's going to fill up, right? Things like that. Just any angle, any lever you can pull towards that. And then, that just continues throughout each stage of your marketing. And
Yeah, that's great. You brought up another thing when it comes to, building a rapport, doing stuff face to face, making it more human, right?
Yeah.
In such an AI artificial follow-up type world. One of the things that we look at is, I call it, and it's kind of a funny name, but the levels of intimacy of communication.
Ooh.
And yeah, it sounds worse than it is, but
Yeah.
basically it's thinking through, like, there's a big pool of people that you will call.
Sure.
There's also a big pool of people that you'll send a cold email to, right? But as soon as we start to get down to a text message, a selfie video, a voice memo, those start to get more and more intimate, and there's less people that you're willing to reach out to in that capacity. And so one of the best practices I always recommend is meet people where they're at. So if somebody emails me, I'm going to email them back, but I'm going to try to move them down a level.
I like that.
To make it more human. So I'm going to try to move them down to a text message or a phone call. If they call me, we have a great conversation. I'm going to try to move them down to a text, a voice memo. I'm going to try to get to selfie video, a FaceTime. I actually think selfie video is the most high stakes. Yeah. It's the best tool, and here's why. It's because you control the distribution. So you record a video and it doesn't come out well, you're like, scrap it, start over, record a new one.
That's a good point.
When you send it, it's now documented. It lives forever. They can go back and rewatch it.
Yep.
Right. And so it's more high stakes in that regard in terms of what you say.
Yep.
Versus something live, a Zoom, a FaceTime, where it's like it's not being captured.
Right.
So I think that's kind of like the bottom. You want to move them down to face-to-face, selfie video, or live.
Yeah.
But most people don't start that way. And so it's like, meet them where they're at. Don't come across like a weirdo, right? Don't just jump. Hey, let's jump on a FaceTime. You're like, whoa, easy, pump the brakes. I filled out a Facebook lead.
Yeah. Totally. And I like just simple thing. It's like typically I'll call somebody who fills out a Facebook lead form, and I'm just like, hey, reference, just following up. Well, I don't usually say follow up because that's kind of but basically just reference,
Taboo.
hey, fill this out. What?
I said taboo.
Yeah, taboo. Don't say that. Don't say I'm following up.
Yeah, yeah.
There's that guy on.
So here's the framework I use. It's
Yeah.
value added follow up. So the idea is that
Yeah.
people never change their mind. They
Mhm.
make a new decision based on new information.
That's good.
And so if they haven't moved forward thus far,
Yep.
then I need to introduce some new information so that
Yep.
I don't challenge their ego to try to get them to change their mind, but
Totally.
rather I'm giving them new information so they can make a new decision. So when I follow up, I want to add value in my follow up by always introducing something new.
Yes.
And if I'm just checking in or following up, I'm not doing that. I'm never going to make any progress.
Totally.
You're just doing it because you're trying to check off your task in your CRM. You're not actually trying to move somebody closer to the finish line.
Yeah, that's good, man. I had this experience where I was calling people without the value, and then the bonus depreciation got renewed, 100% bonus depreciation. So all of a
Great
sudden,
reason to call.
you need to know this for your planning. So I'm just like, everybody, and you know what I did? So there's this email follow up after I left a voicemail, basically on that. Hey, give me a call if you have a couple minutes. Want to update you on this. I left an email. Before this point, I was kind of giving them information in the email, and I was like, no. So I'm going to move over to, hey, law just passed, big update. Like, give me a call if you have a couple minutes. I'll tell you kind of, how it impacts you. So like again, teaser, got some value for you. Call me back. Right.
Yeah. Now you're acting as a true advisor, helping them make the decision.
Totally.
So I think sometimes we overcomplicate it. A couple more questions for you. One more tactical one, and then I want to kind of go big picture a little bit. So tactical, I found this with a group we were working with recently, and it was helpful to kind of call this out. I've never done this with any other group, and I'd be curious your thoughts on it. We early on, and essentially we had to train the IR team on this idea first so that they could speak about it intelligently and off the cuff. And the idea was there's 3 numbers: how liquid someone is, how much of that they're willing to invest, and how much of that they're willing to invest with you.
Yeah.
And almost kind of calling those out to say, hey, when I ask a liquidity question, I'm not prying. I'm asking because I know, and there's some averages that come into play that you can start to figure out with your current investors, but there's some general ones with just accredited investors overall.
Sure.
But what we found was you could pretty accurately say, hey, what's the liquidity number? I've got $1 million liquid. Great. Most investors, again, kind of the herd mentality, most investors typically aren't looking to deploy more than 70% of their liquid capital.
Yeah, I like that.
So now I know I'm only operating with 700 grand. You've never invested with us before. So now I know there's another number coming into play. Most investors now also aren't willing to deploy more than 25% of that with any one firm.
Sure.
And so now I know we're really only having a conversation about 200 grand max, even though this person's $1 million liquid. And so I think it almost kind of helps to address the elephant in the room.
Totally.
That liquidity doesn't mean investable dollars.
That's good.
And investable dollars doesn't mean investable with me or with you, right? And so kind of calling that out of like, hey, how do you think about your allocation of capital or your allocation of liquidity?
Yeah.
And I'm sure you have some of these conversations organically. We kind of built it into the initial call of just, hey, have you ever invested in a syndication before? Okay, how liquid are you? And sometimes you get some pushback to that question. And that's why we had to do a bit of training with the team to be like, hey, here's why we're asking it. So that if somebody gives you any resistance to the question, lay out these percentages. And then say, hey, does that sound like you?
Yeah, that's good.
And an investor says, yes. Okay, great. So I just want to confirm, as a first-time investor with us, you're probably only considering around 175 to 200 grand. Does that sound right? It's like, great. Let's just call it what it is.
Yeah.
Can we just talk about it like it's normal?
Yeah, I love that, man. Because that, I think as somebody in my seat, and really as the operator, like you're making decisions of, okay, how much do we need to spend on that? So all that data can be accrued over time to say, okay, here's kind of what we would expect our averages to be, and can help you with some good decisions on the capital raising side. I love that. And I think, I've seen that go different ways, right? I think the most common, if you're not playing that leadership role like you just described early on, you're going to see people basically just hugging the minimum or asking for exceptions to it, right? And so again, that's where you want to get that more global picture of their finances. And I think if you introduce that early on, you are positioning yourself again as an expert. I've been here before. I work with people. I help them achieve their financial goals through these means. And you need to have that conversation early on. Is the bottom line.
Yeah.
Otherwise, here's the deal. I was talking with a guy this morning and we had that conversation, and he's like, offers up, yeah, I have a $4 million net worth, and I want to allocate 25% to syndications. It's like, great. That's really helpful. I didn't ask him what his net worth is, but in the context of having that type of kind of percentage-based conversation, he just offered that up, right?
Well, it also helps you understand too, like, do they even, like, most guys have a 100K minimum. It's like, do they even have the 100K?
Right.
I was talking to a group the other day. They use this terminology. They have a soft minimum. I'd never heard this before. Okay. They said, we have a soft minimum at 250.
Yeah.
We've taken less than that in the past, but they had some perks that you get at 250 and above.
Yeah, that's great.
And so this terminology of we have a soft minimum at 250, it was like, oh, I love the price anchoring of that.
Yeah, price anchoring.
And a little bit of the posture, ego to say, hey, investor, this is where you get some of the stuff.
Totally.
We will take less than that. We would consider it. We've done it in the past. Because usually that's an educated investor is going to ask, hey, what's the minimum?
Right.
And we always coach that you want to try to get to averages, not minimums. And so introducing like, hey, our average investor puts in about 175,000 typically. Yeah. But we do go down to as low as 100K.
Yeah.
Instead of just jumping out, most IR guys are just, oh, here's the minimum because they want to get a quick yes.
Yes, exactly. And I love that. And I think you actually introduced us to that at ODC. And Brandon Turner talked about that too. So this idea of, okay, averages. Hey, we have a couple investors kind of closer to 900, $1 million in this deal, but our minimum is 100K, right? So you're kind of giving them that range. I love that. And I think that's worked really well for me, just in different conversations.
Yeah. Okay, so let's talk big picture, because you've worked with some powerhouses in the industry, big names, big reputations. What are some of the things, whether it's Joe Fairless, Brandon Turner, Chad Sheeler, what are some of the things that they've done really well that have made it easier to raise capital from a reputation standpoint, personal brand standpoint?
Sure.
Earlier you mentioned, the question people are trying to ask is, who are you and what have you done?
Yeah.
What was it? What are some of the best practices, I guess, that
Sure.
you've seen, or some examples maybe you could share? And then what are some of the things you've seen just in the industry that maybe guys shouldn't have done, or that should be avoided, right?
Sure.
Like there's some of the obvious stuff of like, you have some bad deals, it's going to make future deals really difficult. You have a capital call, you're probably not getting that guy as an investor in the next one. But what's some of the stuff, like big picture, you've seen from some of these guys from again, personal brand, reputation, Sure. the way they built the company, the structure, where it's worked really well or it's made your job easier?
Sure.
And then what's some of the stuff you've seen in the industry where you're like, whoo, that is a fatal flaw. They should not have done that.
Mm-hmm. Yeah, man. And I think we could do an entire podcast just on this one question. Seriously. So I'll just, some of the things that come to mind off the cuff is Brandon Turner. I mean, yeah, it's funny. Like, some people will tell me like, yeah, of course you raised all that money with Brandon Turner. Like, he's got this brand, right? But I think the reason why people felt a strong degree of trust with Brandon is because he just was authentic. Like, he was on social. It wasn't just that he was on social media. He was open about his, priority of his family, his faith values, and his, things that he's done wrong, right? So there's this kind of authentic, I feel like I know this guy. I feel like we're just kind of sitting at a family barbecue and we're just chatting, right? So there's this kind of, I think he did that very well. And so as an investor relations guy who's representing Brandon and Open Door Capital, that was really the extension of that was what I was going for in conversations.
Sure.
Joe Fairless, what Joe did really well, I think, is he built this best ever brand. So it's this huge podcast, the longest running daily podcast or real estate podcast. Anyway, you can look it up. But, through that, he's establishing himself as this industry expert. He also paired up. So Joe invested personally in multifamily, had some investors, and then paired up with an operator, or more of like a kind of a classic, big firm kind of guy, Frank Rosler. They partnered together to form Ashcroft. But Joe, again, kind of built this brand where he was featuring all these other operators, right, on their podcast. And so he got to sit there in the seat of a convener, right, and be this kind of this value to people, right, and to other operators. The other thing I saw Joe do really well, and just Ashcroft in general, is we talked earlier about education. So Travis Watts is on the team there. And his role is basically helping people grow in how to think about syndications, how to understand the markets. And so just that education component is something that I think Joe wisely saw. This is a huge opportunity for us to really add value to LPs broadly. And, they saw a lot of people come on board with them because of that, right? There's that trust.
It demystifies the process for an LP looking to invest in a syndication. Because I think you see this a lot when it comes to the education side of things. I would say Cardone is probably best at this, and he's pretty like self-admitted about it, where I'm going to put out educational content around how you can invest in real estate.
Yes.
And what it's going to do is it's going to build a ton of authority because you're going to realize I'm the expert at this.
Yep.
But I'm also going to tell you how really, 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 really hard it is.
Yeah.
So that at the end of the day, if you decide, man, that sounds like a pain and sounds really hard, there's also the alternative where I can raise my hand and go, or you can just give it to me.
Yeah, just it's fine.
And there's a lot of guys that follow that blueprint of going, I'm going to educate about real estate so that I can show how hard it is, so that over here they'll just pivot the money to me. I think the second layer is exactly what you're talking about, is how do we then educate as not just how you can be an active investor, but also if you want to be a passive investor, you can give it to me. And here's what to look out for. Like we talked about this around educating people who have never invested in a syndication before and saying, hey, here's what to look out for. Here's where you find hidden fees. Here's what the best syndicators do. Here's what the worst ones do. And you can kind of play that conversation to make yourself come out smelling like roses.
Absolutely.
And so I think there's some guys that do some LP education for that purpose exactly, where it's like, hey, if you're going to compare me to my competitors, I'm going to tell you how I want you to measure me against them.
Yeah.
And it's going to make me look better.
That's so true. I've heard this. I can't remember where I heard this, but basically, like in different business settings, you'll have one brand who just says, we do this, right? And it's like everybody else does that, but you're just the first one that said it. Yeah. And so like if you can basically just articulate something, right? Yeah. Like one of the things I often say is, hey, we don't believe in putting high numbers on the page just to get investors in the door. So you're basically throwing all these people under the bus or introducing this concept. Like actually, this makes me think of a good friend of mine, a super successful guy, kind of a private equity guy. He's like, hey, one of the things we always use in sales is this like fear, uncertainty, and doubt, right? So we always introduce this level, always introduce this level of fear, uncertainty, and doubt around whatever they're thinking about, if it's like an alternative to what we're doing. And I think that's basically what you're talking about with regard to just, okay, some operators do this. You got to watch out for this. You got to watch out for that. And then you're able to position yourself as, hey, but we don't. Like, I'm the trustworthy guy. I'm telling you what to look out for. So clearly, right? So that type of stuff. I do want to highlight kind of another segment of things I've seen done really well. And the thing that comes to mind is actually when deals are not going according to plan. So, Joe at Ashcroft has spoken publicly about this. Like I was involved in the firm's first ever capital call. And, I think it was
your fault, basically, is what you're saying.
Yeah, it was my fault. I mean, they hired me, and then it was like the whole, no. So
was there a moment where you, like when you found that out, where you were like, oh, dang, what did I get myself into?
I was like, oh boy. I can't imagine. Was like, okay, here we go. Like, this is what I signed up for. But you know what? I think that I bring this up under the umbrella of things that have been done really well, because what I understand is that, Joe and team went and they researched like, okay, how have capital calls been done? He personally is an LP in like a ton of deals, right? So he's seen it. He's been involved in it personally, seen what not to do, seen what to do. And the level of transparency and communication was, bar none. Like it was amazing, right? And so to lead out with our team calling every investor in the deal, they didn't answer. We're calling them back. We're getting meetings. We want, even if our goal in those conversations was not to convince somebody to do it. It was, I want you to be informed about how we got here, what's happening, what we're going to do about it. And then, hey, like we're asking you to contribute more. And here's what the outcome of that is anticipated to be. Here's why it's actually a good thing, right? So just the way that was handled was exceptional. And I think, he's spoken publicly about it. I think it was on the Passive Pockets podcast. Joe was on there and talking about just how to talk publicly about challenges. And so just, again, that's actually something that I would introduce to new investors on a call, because they can Google it, they can find out. And so I want to be the one controlling that narrative, right?
Sure.
I want to be the one being like, hey, we're transparent here. And so, I think for any operator has stuff that's not going how they thought it would be, I would actually see that as an advantage, because, what we saw is from those who had contributed to the capital call, a lot of them actually contributed to new deals because of the way we communicated with clarity and transparency. So, there's a lot of great operators out there. And I think just those are some of the main things, whether it's kind of on a new deal or existing, how you communicate and the transparency that you show throughout that process. And even making sure you're not just like, again, trying to wave we're the best return over here, right? Kind of just being modest with what you're looking at. Setting expectations is huge.
No, that's great, man. So if you're getting ready to do a capital call Brian.
Yeah. Dude, honestly, man.
Could you imagine I'm so good. That's what you're known for?
Honestly,
you're the guy you call when that...
Like, I'm actually really good at those conversations. I really hesitated to identify that way, but just the numbers, the conversions, I was like, hey, at the end of the day, what you're doing is you're just connecting with people, hearing them out.
Was there a big fall off? I don't know if you can share, but was there a big fall off in terms of internal employees? Because I'd imagine a lot of investor relations guys, that's not why they get in the game. And so if you're like, hey guys, we're doing capital call, there's probably guys that are like, I'm out. I'm going to go find somebody else that doesn't have bad news.
Here's the thing. We were so well prepared for that. And it just speaks to the leadership, so well prepared. And I think, recognized for the challenge that it was. And, so there wasn't much kind of fallout from that.
Wow. Impressive. Okay. Last question for you. Kind of a speed round, because this is a big,
let's do it, baby.
Big question, but I just want kind of some quick, what comes to mind first.
Yeah, sure.
You come across a great deal. You got to raise $10 million. You personally, you're like, you've built a network. You've got people. All of a sudden somebody comes to you, they're like, Brian, hey, I think we can take this down. We're going to have to raise $10 million to do it. We've got, let's call it 90 days.
Sure.
You're starting from scratch.
Yep.
What are you doing first 30 days, next 30 days, last 30 days?
Sure. Early on, assuming you said I have an existing network, right? So
yeah.
I'm blasting it out to them, kind of teasing it, right? And then setting up those early calls. The reality is, if I don't have a bunch of capacity in terms of my existing donor base, I'm probably finding some trustworthy folks who maybe are, fund to funds or some different folks like that, just to at least get the deal in front of early on. That capital is going to be more costly than, me raising it myself. But, I want to at least start with those conversations in the first 30 days. And maybe I can get a commitment of, okay, I can get $1 million here, $1.5 million here, and kind of know that I maybe call it like 7.5 to raise instead, right? So you're kind of chunking that off in the first 30 days. Obviously, preceding that, you want to put together, why do I love this deal? What are the risks about it? What are the returns? All the data, right? So we want to get that together and make it really clear. I want to start.
What do you recommend? Do you recommend a deck, a one pager, a webinar?
Love everything. So everything. So, I love the one pager as an initial thing, because it just gives them a quick overview. It also gives me, if they click on that in an email, I know they're somewhat interested. I can call them. If they click on a deck, they're more interested, right? If they join the webinar, they're more interested. So it's just anything I can, like you talked about earlier, any more value that I can contribute throughout this process, it just gives me another reason to reach out.
Got it.
So, I'd say you're gonna want to.
You're looking for some big checks. Some fund to fund, some big checks, make some progress.
Yeah.
What about?
But also from your existing investor base, maybe you have, if you have this kind of phase of early commitments, right? Soft commitments, you can at least have a sense of here's where we're at, right? Even before your offering documents are ready, you want to kind of gauge where people are at. If you know the deal's coming, this precedes the 90 days, right? But if you know the deal's kind of coming, you can at least send out a survey or something. Hey, here's what are your preferences? What types of deals are you looking for in the next, call it, nice. So
Yeah.
just
If
prime
I had a deal,
if I
what kind of deals would you want to
totally.
know about?
Well, and this actually, again, this speaks to the power of just outreach with nothing to ask for, right?
Yeah.
It's like, if I'm reaching out to you, adding some value, hey, just, wanted to tell you about this new tax law that came out. What are you thinking for the year? Like, blah, 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 blah. Like, just, right? Then you're priming that pump.
Got it. All right. So day 30 to 60, what are you doing?
30 to 60, man, I'm keeping, hopefully I'm, somewhat percentage subscribed by then. I'm telling people, hey, here's where we're at. If I need to, I'm launching additional kind of videos like, hey, here's all the risks associated with this deal, and here's what we did about it, right? I'm getting on as an operator with my acquisitions guy, and we're talking about that. And then that, just anything I can do to generate new information that drives more engagement so that I can connect with those engaged, great. I'm doing social ads, right? So I'm getting the word out on Facebook, I'm posting on LinkedIn, and all that's happening to really source me with new interested leads.
Yeah. Have you hired anybody at this point? Would you bring anybody on to help you?
Probably so.
What kind of role?
Yeah, you're right. You're just an operator, huh? I think
Well,
it depends.
I mean, you can do it any way you want. It's your 10 million, but
Yeah.
would you bring on somebody to run paid ads? Would you bring on a setter? Would you?
I think if I'm an operator, and I probably, if I don't have a team right now, I want to be the one who's have somebody who's doing the paid ads, helping me with that. I probably want to have a setter because it's just tedious. Like, you're calling through people.
Just capacity wise.
Capacity. I want to be spending my time with investors who have capital, who have at least thought about the deal a little bit, and close them, right? So that's probably where I want to spend my time as an operator. If that's not something I like to do, or think I'm good at, then yeah, I can look for somebody and maybe bring them on a contract basis, and maybe that develops if I have more of a pipeline of deals into something more full time. But
yeah. Okay. And what about the last 30 days? What are you doing to close this thing out?
Dude, I'm just hammering the pavement, bro. I think that I am, again, just continuing to communicate. I'm talking about scarcity, talking about the closing date. I'm hitting up existing investors. If I'm kind of at a point, let's say I have like $1 million left, right? And it's like, okay, hey guys, here's where we're at. Asking people maybe to throw in another 25. Like, maybe I do that too so you don't want to freak people out who are in the deal. But there is this opportunity, I think, to invite people in. Okay, we're this close to the finish line. Let's get this thing done.
Yeah, I think you can phrase it in a positive way, where you're letting them know, hey, we still got a little bit left to raise. It's more of a courtesy update. Got a little bit left to raise.
Yes.
Here's what we're projecting. There's this many more spots. Before I take on any new investors, I'm just touching base with all our current ones to see, in case you want to throw an extra 20, 25 grand at this deal. And you'll find, what we've found is you'll get almost 40 to 50% of investors who will put some dollar amount extra into the deal. And there's no cost of acquisition, no cost of capital for that, because they're already filled out their accreditation letter. They're in the portal. They know how to do it. Very frictionless.
Yeah, totally. And I mean, I've seen that produce referrals, right?
Sure.
And that's, again, cost of acquisition of that lead is zero, basically. Yeah, man. So
perfect. Dude, thank you so much for being on. I feel like we got to pull the curtain back, get some nitty gritty details, talk big picture. Where can people connect with you if they want to talk more about this kind of stuff, want to get your opinion on a deal, if they're just getting started raising capital, or they just want to, pick your brain for some best practices? Where can people connect with you, find you?
LinkedIn. LinkedIn's probably the best.
Cool.
And just hit me up in the DMs or whatever, as the kids say. Yeah, but happy to give any feedback. I think I've been involved in creating kind of decks and all the things you talked about, right? So we just give thoughts and be helpful where I can.
Awesome, man. Cool. We'll make sure to link your LinkedIn in the notes. And again, man, thanks for being on, and appreciate all your insights.
Love it, man.
All right. So we just wrapped up with Brian. Ton of jam-packed info. If you are looking to raise capital in today's current climate, Brian is a great resource to follow on LinkedIn. He always has great insights and thoughts as to what's going on, and he's having tons of conversations with investors. And so he's great to get feedback on, to know what kind of objections are investors having, what are they thinking, what kind of frequency are they investing at. So be sure to follow along and check him out on LinkedIn.